first, I want to talk about the increased disclosure that we got. A lot of analysts were really excited to get cloud numbers, to get YouTube numbers. They thought it would represent a sort of re-rating higher for the stock. Today, that doesn't seem to be happening. What's going on in your opinion?
That's such a good question. I was one of those analysts who was really excited to see those breakouts, especially YouTube, which is something that we've long been curious about. Compared to what we expected, looking at the non-YouTube portion, which is primarily the core search business, it did come in a little bit softer than we expected for Q4, although that was after it outperformed our expectations in Q3. So for us, they were on target for the year, but maybe did have a little bit of a softer holiday season for search than folks were expecting.
Is YouTube a lot smaller than we thought?
YouTube is actually a little bit bigger than we at EMarketer thought. We have been breaking out estimates of YouTube ad revenues for several years, despite the very limited disclosures, and we were a little bit conservative. I think we were about $1 billion under for 2019 in terms of revenues.
We're seeing capex easing, Nicole, but the headcount, self-driving cars, biotech spending has all been soaring. Is spending a bit of an issue for Alphabet?
I mean, it is a bit of an issue, but they have so many lines of business with potential profitability far into the future that, it's hard for me to speak too much to that side. I do primarily look at the advertising business, and, even that side of the business, which is so much more mature, is still performing really strongly. That core non-YouTube ad side was up 15 or 16% last year. And for a mature business like Google search business, that's pretty robust growth.
Previous guest, Colin Coleman from Forrester, was expressing a little bit of concern over the implication for cookies in Chrome getting phased out. Do you share those concerns?
It's definitely a concern. It's a concern across the entire digital advertising and media industry. I do think that Google has given itself a good amount of time. This won't be in effect for about 2 years to figure out how they're going to work on some alternate systems. And, they have the footprint to, be the one to determine potentially a new standard post third-party cookie.
Nicole, we're in the middle of the analyst call right now. The Google CFO saying that the cloud sales backlog is worth about $11.4 billion. At a distant third place, is Google doing enough in the cloud business?
Such a good question. They're doing a lot, and they are in third place, but they certainly have the resources to spend a lot to gain a lot of potential new business. So it doesn't surprise me at all that he's focused on that potential new revenue down the line. Revenues have gone up very fast in the past 3 years based on what they reported today, so it seems like that business has a lot of potential.
The CFO is also coming out and saying that hardware revenues declined during the quarter. Do you like the shift from hardware to cloud, from hardware to services, or does the hardware revenue decline worry you a little bit?
It's not worrying me. We don't think that hardware sales are particularly important to Google's business. We certainly think that their core focus on advertising and other services has high profitability potential. So we're not worried there.
We have seen Google shares or Alphabet shares easing a little after hours. But if you look at this as a slump, would you consider it a buying opportunity? Because the CFO, Ruth Porat, says the total market for digital ads is still very big. So is there still plenty of upside here for Alphabet?
I think there's a ton of upside still for Alphabet. As I said, their core search business is still growing robustly in double digits, despite having been around for decades at this point. And they've been experiencing significant competition on that side from Amazon in the past couple of years. Amazon has more than doubled the size of its search ad business, but it's not really taking most of that share from Google. It's taking it from other sites and from the long tail. So it seems like there is a lot of upside left.
We were discussing last week with Facebook some issues around regulatory concerns, and we've got a story about Google potentially forcing advertisers to use its own measurement tools. Can you see some potential antitrust problems on the horizon?
Well, we know that the state AGs that are investigating Google for potential antitrust violations are specifically interested in their position in the ad business and what I would call the display ad tech stack. Google does have a lot of control because of the assets that it holds, including YouTube, including its search business, but far beyond that. And it does have the ability to convince advertisers to adopt new standards and initiatives. We've seen that happen in the past. So, regulators are watching, and I think they may well be very interested in that.